The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Rich Anderson as our guest at the half hour. We're going to be talking about some of the things happening in the grain markets and also some of the weather patterns that we're seeing. I mean, can you believe that it was going to be 82 in Washington, D.C.? Shut the front door and raise the rent. Boy, that's a pretty warm day. Let's take a look here at the DAX like we usually do. I'm not going to be able to do the FTSE today, and the main reason is I didn't keep it up, and there it comes. I'm sorry I was a little bit late here. So you'll notice here that we hit a pretty important bottom here in the DAX on a 15-minute chart going the last couple days. That equates to what we hit on the bottom on the S&P yesterday. If you were looking at the Dow Jones or the S&P chart and you follow the little ABCD patterns that we always do, you'll notice that we made a very nice ABCD pattern in the Dow Jones E-mini down there about 2470. So we rallied about 150 pips. It's going to be interesting to see if we can get it above 25,000, because if we do, then we could be looking at, substantially more higher prices, coming into this week. But this has to be a really strong week to get there, because remember we started down, had the big break, and really have really not bounced very much from there. So it's going to be interesting to see what happens. Folks, there's a big pattern happening in the Treasury bond market, and by golly, what did I do with it? I know I got it here. I wanted to show it to you. Shut the front door and raise the rent. Shucks. This is frustrating when you think a guy with a college degree would be able to see some of this stuff, but what did I do wrong here? Doggone it. I'll have to do it in just a minute after the first break here to find if it's a beautiful little bottoming pattern in the Treasury bonds that came in last night, pretty much spot on like it should have. The problem is this old cowboy can't find the darn thing, and I know it's here. I do this every day, and I put him in order so that I should be able to see him, but oh well, that's neither here nor there. We'll see what's going on. I wanted to bring this chart to your attention here. One of our listeners here at TFNN sent this to me. It's about the federal debt, and I know much about this as I do about baking croissants, which is very little. Okay, I don't know. The rent will never be lowered. You can shut the door any way you want. Anyway, you look at the debt to the federal debt to U.S. debt, and they've been going pretty much together. Debt is not usually a very good thing, and most of the time debt is not repaid, whether that's going to be the case or not. But from 1976, when we were under, we were about $500 billion at that point, and now we're at almost 21 trillion. Boy, that's a lot of money. And if these interest rates go higher, which they appear to be heading that way, it's going to be very difficult for them to pay this stuff up. So we'll see if that's going to be the case or not. Now, we've broken down in the gold. We're coming down very close to that $1,300 per ounce level that we've been watching for quite some time. I really believe that we need to wait. We're on the 22nd day of February. In 6 days, we're going to be looking at another lunar cycle. It's going to be a full moon, and we'll have Norm Winsky on that day. And that's where I think we might be looking at a potential bottoming area here in both the gold and the silver. But right now, it looks like, and we could get a $15 or $20 rally here without too much trouble in the gold and silver, but I still think we're going to be moving down, into that area. That's the main thing that I think we should be looking at. If you'll bear with me here just 1 second, I want to see if I can find this this pattern that I found in the bond market, because it was really very, very unique. I believe it was four-hour chart. Just give me 1 second here as I'm looking at this. And we got it. There we go. We're right in here right now. So let me bring this up to you, and you'll be able to see it. There's not much of a bounce yet, but there's a possibility of it. Let's just bring this to you folks so you can see it. It's going to be a little bit of a trick to get it in here. Hopefully we'll be able to I was trying to think of that new Fed chairman's name all morning, and I couldn't remember. Powell is his name. And is Janet Yellen still in the hunt there? I mean, when does she leave? This is I think she leaves in March, and this is February, so that's why she was on the tube. Anyway, there's a really strong number there. This goes over the last couple of weeks. We're looking at a 3-drive pattern here, and it goes all the way back into early February, the cycles that are there with the bonds. So watch these bonds here, because we might finally start to rally. We've got all the bearish news in the world out now, and but long term, folks, these things look like they want to go a great deal lower, i.e. higher interest rates. So if you need to get a new mortgage or something to that effect, I would certainly take advantage of that now, because I think you're going to be seeing rates probably closer to 5% in probably about a year from now, maybe a little bit longer. That'll be back to the normal level that we had for many, many years. But it could go a great deal higher, because if interest rates start to increase in our debt that we owe the rest of the world with these Treasury bonds and Treasury notes, we have to pay higher interest on it. That's not a very good thing, folks. That's like having a credit card bill that's maxed out, and they're telling you that, yes, your rate's going to go from 24% to 36% because you've overborrowed. So that there's always that possibility, and that wouldn't be good anywhere, because interest rate money goes out the window. And but these poor people that have been on retirement income for many years, those are the ones that have been in this hidden tax brackets, where they have no interest coming in. But maybe that'll change a little bit. But like I mentioned to somebody yesterday, we were chatting about, I said many of the folks that were involved in that are no longer with us, because that's been a long time ago. That interest rate thing started 33 years ago, and that bull market is now over. So we'll take a look at it. As far as the S&P 500 concerned here this morning, we should have some pretty strong resistance at the 61% retracement of yesterday's high, which was at 27.23. That's where it comes in. We're at 27.11 right now, which is right near the 50% retracement. But folks, something really big happened yesterday cycle-wise in stocks, because if you're up 300 points in the Dow, and within an hour and a half you break 450 points, 500 points actually, because you went down lower overnight, but that's usually not good technical action. So that's something that we should pay, relatively close attention to. So we'll see if that's going to be the case. I also wanted to bring to your attention the, let's just get this up here, because I had this is what I wanted to show you. Oh, shucks, shut the front door. I have lost my charts. I know I've lost my mind. Why have I lost my charts? That's what I don't understand. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at Amazon. We were talking about the potential double top in Amazon. And what I wanted to do is, I know a lot of you folks are monitor junkies. In other words, you sit there for 8 hours a day looking at that screen, which is pretty tough nut to handle. I'll cover that in just a minute, but I wanted to show you, you can see the when we made a new high yesterday in the Amazon, we actually closed considerably below that, considering it got to 1,500. But if we go and look at this just a little differently and go down to a 60-minute chart, you'll be able to see when it made that new high, it made a really nice three-drive pattern. As you can see, it's a really nice ABCD. There's the type of trade that if you're watching your monitor, you know, that's, you want to have that set up, but you don't have to watch it all the time. All you have to do is to put your limit minder in, and you folks have heard my limit. Well, you can't hear it, but my limit, usually when the market's open at 9:30, my limit minders will start to go off, and I just turn them off. But if you have that limit minder in, you know, that'll be the easiest thing to do, folks. You know, it's hard to. Like I've heard people talk in the den this morning about patience and how hard it is, but looking at that monitor is the worst thing that you can do. Actually, folks, I look at that monitor during trading hours, less than an hour a day. I look at it early in the morning when I'm getting ready to do the show. I look at it at about 10:30. Then I have my limit set in. I'll check it one more time, usually around 11:30, and usually by 12:30 at Tucson time, which is 2:30 New York time, I'm pretty much done. But the monitor is not your friend because, you know, Mark Douglas taught me that when you're looking at that monitor, it's like a mirror, and it's a reflection of all the things that are going on in your life, the fight that you had with your children, or the fact that your wife is spending too much money, or you're spending too much money. A lot of things can be going on. And when you're trading and that stuff is in the background, boy, that's a really hard nut to crack, because this is a psychological game. The technical part of what we do here is really, that's really simple. That's up, down, sideways, and add, subtract, and draw a few lines. But the psychology part is the part that's really, really difficult. It's that 9-inch cycle from your left ear to your right ear that means something, and everyone is different. I recommend, the works of Anthony Robbins and, of course, Napoleon Hill. There's a lot of people that have some really great stuff, and you could do it yourself, of course. But reading people that have gone through stuff like this helps a great deal awful. So we'll see. Someone say, I don't fly a plane because I don't like to be up in the air. I flew on a private plane 3 times in my life. 2 were Gulfstreams. I did one with 20men back in 78. We were at Drexel. I decided not to do that anymore. By the way, folks, this is an exciting week for me because this is the Olympics and the hockey is going on. The ladies hockey team won. I don't know anything about hockey. I know that the puck goes in, they get a goal, that kind of stuff. But one of my favorite experiences in my life is when the 1980 Olympics was happening. It was a Sunday morning, and my youngest daughter and I were home, and my wife and my other daughter were at church, and so we were watching it, just because there was really nothing else on. But my daughter wanted to see all the movie stars that were there. A couple of Charlie's Angels were in the room, I believe, or I forget who it was. There was a bunch of people, and the game was getting close, and it got to be tied 3-3. And Al Michaels said, boy, he says, it's getting to be a really close game here. If we can get another goal, we really got a chance. And just a few minutes later, they scored another goal, and Al Michaels was going crazy. And my daughter asked me, what's going on? And, Al Michaels was screaming, pandemonium's breaking loose. And she says, what is pandemonium? And I said, pandemonium is a little dog that comes out on the ice with a little American flag on his back when we win. She said, oh, that's pretty good. And so not more than a couple minutes later, Mike Ruzioni catches the puck from Jack O'Callahan, and he knocks in the goal, and the place is going crazy, and everybody's screaming and yelling, and Lauren gets down on her hands and knees, and she's a big screen TV. She walks over, she's looking up, and she's, Dad, where is it? Where is it? I said, where's what? She said, the little dog, pandemonium. I can't find it. And I started laughing, and I was laughing so hard that I fell out of the chair where I was doing my charts, and I'm on the floor laughing so hard I can't stand it. And in comes my wife and my other daughter, and she's screaming, call 911, call 911. And Larry says, let him die. He's making fun of me. I remember that so much. And 13 years later, I got to be friends of these hockey players. And one of my favorite stories, where they became friends of the family too. My sister especially was a big hockey fan, and she got to meet Jack. And the Blackhawks were playing in the playoffs a few years ago at the United Center, and my brother-in-law works for Seneca Oil, and they have one of these real exclusive boxes there. And so Jack came up to say hi to my sister, and when he walked into the box, the owner of Seneca Oil, he totally lost it, because he was such a big fan of that Olympic thing, because he was there at Lake Placid in February of 1980, and he was a big follower, and he had never got to meet him, and they got to be friends. And what was so funny is the owner of the company was looking to put some money into a hedge fund, and that's what Jack does. And he wrote him a really nice check, and they become very, very good friends now over the past 12, 15 years. So it's really a big advantage of meeting some of these folks. Those are human interest. That's enough. Let's get back to the markets here. 2 questions are both about gold. Folks, we got to wait for 1,300 in the gold. I don't see any reason why not to. It's still heading lower. Here's where we were last Friday. We were trading at 13.49 on the close. We're now below 13.30. So it looks like we only got another $20 to get down to that level. And you'll be able to see a really good buying opportunity there. That would be an ABCD pattern, and it would be right at those old highs, which is very important. And then we would be able to see silver, get down a little lower. I'd like to see silver break that $16 an ounce level, because that's going to wash everybody out and have an absolutely symmetrical 3-drive pattern in that silver. If we get there, I'm not sure we will, but we do have this full moon coming up on the 28th, and that'll be very, very important. And remember, we do have Norm Winsky will be our guest on the 28th, and that'll also be a fun thing to have, because he's always good. We'll also have Stan Harley next week, which will be a good one. But we have Rich Anderson coming in today, and that'll be a fun one to have. But next Wednesday, the 28th, we're coming into the full moon. When is that? That's not the full moon. Why did he ask that for? Shut the front door. What did I do wrong? That's not until, uh-oh, I did that wrong. But I know he's our guest on the 28th. Oh, he must have a bunch of cycles that he's looking at, because he requested to be on that time. And my thing doesn't show the 28th, but it's got to be close to that, because it's got to be close to 14 days. You see the 15th? Yeah, it's got to be the full moon, because it's 14 days from the new moon. So that's about it. Okay, we'll keep an eye on that, and we'll have Rich Anderson at the break. We're going to talk about some grains and see how they work. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson of Anderson Capital Management on the line. Rich, are you there?
You bet. Good morning, Larry.
Good morning. We were just talking about the U.S. dollar, the fact that we had that false breakout below that 88 level, and then the market immediately reversed and continued to do that. And
but
can you tell
for a low in that last Tuesday?
Yeah, but tell the folks how our grain markets are affected by that. You want to give them a little little primer on why that works that way?
Sure. Well, first of all, the reason that they call for a bottom in the dollar was, Rick's a technical guy, and it had to do with time cycles and price cycles. But if I'm a European and I'm buying grain, I'm buying it in terms of dollars. And so how much does it cost me to buy that dollar to buy that grain? So the cheaper the dollar is, the cheaper the grain is. And the more expensive the dollar is, the more expensive the grain is. And the price of the dollar coming down has made our commodities, grains in particular, more attractive to the world. Whereas at the beginning of the year, they weren't. The first show I was on in January, I told you that I thought that the dollar would get to between 87 and 88 by October. Well, obviously, I was wrong. It got there a lot sooner. But now these time cycles are coming together. Part of that is due to the flow of funds. There's a lot of money being repatriated by these major corporations like Cisco and eventually Apple and a whole bunch of others will. And so that's money coming back into the U.S. from abroad, so they have to buy dollars and sell whatever the currency is. But for the commodity traders of the world that actually use our grain, like Egypt or China, they have to buy our dollars, and the cheaper they can buy our dollars, the cheaper it makes our grain markets. So the cheap dollar, the weakness in the dollar has helped both the grains and the crude oil market to rally in the last several weeks.
This also has an effect on the interest rate markets too, doesn't it, on notes and bonds?
Oh, very, very much so, very much so. And in fact, by the way, I don't know if you noticed, I thought I was going to be on yesterday. I was going to talk about how the Fed minutes were going to come out, and I don't know if you noticed or not, but there was a little reaction to the Fed minutes. The stock,
yeah, just
the
a little. Yeah.
Later. Well, the other Fed minutes that are coming out today are from the ECB. Now, if you remember last month when the ECB came out, and the only word that really changed was from few to further for the U.S. Fed, but ECB last month caused a huge move in their interest rates and in the euro, which backed in caused fluctuations in our bonds and our stock market, when they said we've got to consider how we're going to move forward. In other words, how are we going to slow down this QE, this quantitative easing? And if I've talked about how the Fed's balance sheet went from $850 billion to $4.5 trillion. Well, worldwide, it's between the ECB and Japan, we're probably talking about $14 trillion. That's not chump change. I mean, the bonds in Japan haven't traded in years because basically the Japanese government has nationalized the bond market. They own all the bonds. So there's nothing, I can't sell something because the government's on the other side of the market, and they're not going to, you know what I'm saying? And they've done that with their ETFs. I hear they've owned 40 to 50% of the ETFs. Well, the QE in Europe was so big that they didn't have enough foreign bonds to buy of the different European countries, so that they actually started buying some of our U.S. bonds. And so if they even slow down the QE, well, the first place they'll stop buying is our bonds, which makes our rates go higher. So you saw the rates yesterday didn't do so well. I mean, we're talking about bid coverage. That's the number of times somebody's paying, willing to buy the bonds is the lowest it's been since 07 and 08. And we're talking about interest rates getting back up there to 07, 08. And
what's the effect of China not buying anymore, Rich? Is that still in the news, or do you hear anything about that China's not going to buy our Treasury bonds like they used to? I think they've scaled back somewhat on that. Have they?
They, along with most of the major central banks of the world, have scaled back. And the bigger point with China is that they are now starting to buy oil directly from like Russia and these other countries in terms of their own currency rather than in terms of the dollar. And they're able to do that because they can then, if I'm a Russian and I sell them oil in terms of their currency, I can then go to the Singapore exchange and exchange it out for gold to immediately make it, liquid. So this is a huge monumental change that's going on. We've been the currency of the world for ages, and times are changing, and that's going to cause volatility in all kinds of interesting things.
Yeah, well, we had no volatility for several years, and now we're starting to see it come back in spades. So,
and
anyway,
perfect for us.
Yeah. Oh, yes. Oh, this is what we live for. This is almost like it was back in the 70s and 80s, and sometimes in the 90s when we had these huge swings. We're having some pretty good swings in some other markets, but they're still at such low levels. It's basically insignificant. We have a question, Rich. First of all, the question is about the cattle market. What is your feeling here on the April cattle? We're trading around that 126 level. What do you feel is a fair value here? What do the charts look like to you?
Well, I was on the road last week. I just got back to Minnesota, but I basically believe the 130 level is to 132 would be fully priced, and I think the game right now is in the Feb, but your average listener can't trade the Feb because the different brokerage firms don't want you trading in the delivery month. But that's where it is versus the cash. The break yesterday was had to do with the get-down day. If I own X amount of contracts in delivery, the Mercantile Exchange has 2 get-down days, and one of them was yesterday, and that caused the sell-off. I think the thing to reflect on is the volatility we've seen in the cattle. There's a lot of algo trading going on in cattle, and they swing down, and they go massively down, and they swing up. I mean, they dropped 210 points in just a flash yesterday. And that was people on the get down. But then if you look back at how they swung back and forth, they'll go down like there's no tomorrow, and then all of a sudden the next day they start going up like there's no tomorrow. The algos have been having a good deal of fun in those particular markets. I think value for the April cattle right now is maybe 120, yesterday's lows to 122, and I think they're probably good until the middle of April. I mean, the middle of March, and then if there isn't any major weather problems, I think they could drift back down and be 114 to 116 by the 1st of April.
Wow, Rich, there's actually algorithmic trading going on in the cattle market, as thin as it is?
Believe it or not, and they've actually asked for expansion of ranges because they like that market so much, they'd like to be able to push it $6
even farther, yeah.
$3. Can you believe it?
Nothing ever changes, does it? We're going to have to pay a few bills here in just a minute, but I wanted to talk to you when we come back from the break, if you have time, about this weather that's going on in Argentina. Remember, Rich, years ago when we used to get those reports about where the anchovies were and how they were moving?
No.
That was 30-some years ago. Wow, hard to believe.
I'll be here.
All right, we'll take a break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, talking with Rich Anderson. Rich, the question that we were talking about before, years ago, we used to follow I don't even remember the service that we subscribed to check where those anchovies were when El Nino was changing around quite a bit. But does that still have an effect on it? I mean, anchovies are, I don't even think they use that stuff much anymore, do they?
It's inconsequential. The soybeans, after the embargo by Nixon, the Japanese started moving 40,000 people a year to South America to start developing the soybean industry, and they now produce huge quantities of beans both in Argentina and Brazil. There is a weather problem in Argentina, and new crop beans, the Novembers are 1025, and the nearby is 1042, the May. March is too close to March to be playing with anymore. You want to be in the May or in the new crop.
What's the
because they're concerned about it's hot and dry down in Venice in Argentina, and it could be an issue. But if we don't have a crop problem someplace in the world, we're going to.
There's always something. Yeah.
November beans, and they're 1025 right now. So, but you got to be sensitive to the weather, and the technicals will tell you when to do something. You just wait for the technicals to set up, and then you do it. And I mean, that's
Rich, it was just a few years ago that $6 was a relatively high price for soybeans, and now that's considered, bargain basement prices. I mean, what happened in the last 4 or 5 years? I know we got to $18 a few years ago, but was that what occurred, that people just undervalued soybeans for such a long period of time?
Well, the world's there's been a huge change in the world, particularly, i.e., China's demand for protein.
Yeah.
Both for soybean oil, their increased usage of soybean oil is dramatic over the last 10, 15 years. And now, as the people have gone from poor to middle class, not middle class compared to the United States, but compared to they're now demanding more protein in the form of meat, and that of course takes the meal, and or the dried distiller grains from corn. So there's been a increase in we've taken like 400 million people out of poverty in the last 10, 15 years, and those people want to eat better.
Yeah, and I can understand that.
It's the demand. And by the way, some of our friends are watching the soybean oil market, and for the right reasons. But right now, there's such demand for this meal that the oil share is, if you look at the oil meal percentages for the beans, is very low, and that's because there's so much demand for the meal, and they're crushing for the meal, and that will change as the year goes on too. But we don't have a crop problem. The use to carry out number, which is the percentage of carry out that we've got versus the amount of use we use of the soybeans in a year, is going to jump dramatically at the end of this year. But, weather's kind of a strange situation, both in South America and here. We've got a major drought that's starting to develop again in the Southwest United States. There was some moisture came in this week, but, that's why you have to trade off the charts because, A, you don't know what the fundamental is that the market is focused on at the moment. So you focus on the charts, and the charts will tell you.
What would be a technical level you'd like to buy new crop beans or old crop beans, Rich? 30, 40 cents lower from here, or what would be your area that you'd feel pretty comfortable being long?
Well, I would just look at the most recent corrections, and yesterday's low was down there at the 1030 level. The high 2 days ago was 1050. I think any place in that 1015 to 1020 is an opportunity. The meal is the leader. I sent you a chart a couple weeks, 7, 8 days ago when it broke out.
Yes, yeah, we were watching that. In fact, I'll bring that chart
on the road, so I couldn't really talk to you. But it was an opportunity knocking. But
it sure was. I know somebody named
change and go vertical down just as quickly if the weather changes. I don't think it's necessarily gonna. I don't see that, but the markets will see it way before I do. So that's why I watch the market.
Yep, I understand that. They're leading the market. How about your feeling on hogs here, Rich? What do you see here in live hogs?
I think they're there's been huge expansion, and eventually that's one of the drags on the cattle is that there's been expansions of all proteins, hogs, turkeys, chickens. At least in my view, that's one of the drags. I think the lower 60s is opportunity, and the 74 to 76 area was a sell zone. They did get up to 77. I wouldn't at all be surprised to see them, sell off to retest their lows back, that 65 level that they were. When was that? And back in August.
Yeah, Rich, I remember a couple of years ago when you were a guest on our show and hogs were trading at 47 cents, and you were up on the soapbox yelling and screaming, saying they ain't never going to get any lower than this. They were I don't know, they were 10 cents below the cost of production or something at that time, wasn't it? I mean, it was some ridiculous. You remember that, don't you?
Yeah, but if they rally back towards the April hogs, they rally. They've had a 8-cent break. They rally back 3-4 cents. 50%. You sell them, and I think they're headed towards that 65. The summer's the big demand time of the year for the pork, and this is kind of a wishy-washy time of the year. Now the cheap dollar makes it any time that China wanted. They could buy a huge amount of pork, but they want to develop their pork industry again, and so that's why they're buying the meal.
Okay, Rich, we got a question. If you're going to take some of your Bitcoin money, what would you put it in now in a commodity? You have anything that really is ringing a bell for you right now? What's your favorite trade right now?
Well, I think
you don't have to have one, but if you do,
I don't have to have one. But I just looked at the screen and the thing that if the silver were to go back and retest, the lows in that under 16, 1575 to 16, I think there'll be opportunity there. Stock market, I think a retest of the highs, you sell it. A retest of this most recent flash crash lows, you buy it. The crude oil, I think it's more of a sell than a buy, and I think at 56 cents you probably buy it. But I don't. I'm personally trying to buy some Feb cattle today, but the average person can't trade in the delivery month. And
yeah, you have to have special permission from your clearing firm, don't you, to have that, Rich?
Well, yeah, you have to be experienced. Yeah. Yeah.
Yeah. Okay.
And I don't blame the clearing firms. Believe me, I understand.
Oh, they're there to protect themselves. Hey, listen, buddy, I want to thank for having you on today, pal, and we'll have you on in a couple weeks, okay?
Next time I'll have a great trade.
Yeah, you always have great trades. Don't worry about that. We love you. Take it easy, buddy. Rich Anderson, Anderson Capital Management.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and while we were talking to Rich Anderson, the S&P E-mini went up exactly to the 61% retracement of the high of yesterday. At that 27.25 level, it immediately broke 15 points in a matter of about 5 minutes, so that's going to be a very important high to watch today, because if we can get above that, this market could certainly have legs. But right now, it just gives it back so quickly in some of these markets that you really have to be a Houdini, to place your trades. But you do that by practicing, patience and discipline, because that's what you really need. Those are the things far more important than the knowledge of any technical market. You've got to focus on what's inside of you, because it goes back to the old Chinese book, Sun Tzu, The Art of War. If you know your enemy, you are smart. But if you know yourself, you are omnipotent. And so the more you know about yourself, the better off you're going to be in trading. And a lot of the stuff that you're looking at, you might not like, but that's still something that you have to pay attention to. I remember many years trading. Well, I only traded 2 years at the Merck, but it was many years ago. Used to go into the members lounge, and these guys were, taking hits with vodka and scotch and God knows what else. And I'm thinking to myself, wow, if these are the guys I'm competing with, this is going to be a pretty nice gig. And boy, believe me, some of these guys would really go bonkers. But you don't really need to do that. If you just focus on what you really need to do, practice to not watch the monitor, and you do it by using baby steps, folks. You just don't stop watching the monitor one day. You stop watching it for 10 minutes, then you stop watching it for 15 minutes, and stop watching it for 30 minutes, and then every 30 minutes you can go in and watch it for 10 minutes, and then stop another 30 minutes. You get to the point where we're looking at it once every hour. Believe it or not, boys and girls, you're going to find this hard to believe. No one really cares whether you're long or short except you. You're the only one. No one else cares. So remember that's a very important concept to remember. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!